Now, before we get on to the business of the pitches and the investment, first I want to introduce you all to a stalwart supporter and participant in SAC since going back to SAC, I think it's SAC7. Elaine Werfelli is going to join us and share some really interesting data on the startup investment ecosystem in Seattle. Elaine is a 25-year Microsoft vet. She's also the co-founder of her own startup, Kachinga, that was also a participant in a previous SAC. She's our data maven, incredibly well-versed in all things Seattle investment scene. And she tracks the performance and activities of angel groups in Seattle. So Elaine, if you can raise your hand, I'm looking, there she is. And I'm going to bring Elaine up. Let's see.
All right.
Oh, there she is.
Yvonne.
Hey, Elaine, good to see you. Did I get it right? Was it SAC7?
It was, man. You got the right number.
Wow. Yeah, what a trajectory. Okay, well, I'm going to get off stage and let you blow our minds with data.
Oh, I'm so excited. Thanks.
Right.
And let me make sure I can share my screen. So make sure you guys can see that. And please feel free to make me small so you can see the screen. As Bob said, I'm a data geek, little pointy head. So I have a lot of numbers here to share with you. So from being on both sides of the table as both a co-founder and an angel investor, I hope for any of you out there who is into angel investing, interested in angel investing, a co-founder or thinking about being a co-founder, that some of this data and insights will help motivate you to get more involved. So what I have today is national data, regional data, and even some local data. So looking forward to sharing that with you and hope you take some fun tidbits away. So when we think about what I have here today, it's both US, Northwest, and we'll conclude with super highlights from the Seattle Angel Conference. The national and regional data comes from the HALO report, which is an annual report on angel investments from the Angel Resource Institute, working with PitchBook. And this data that I'm going to share with you is from 2020, so last year. And it's based off of 2,198 deals. And what I really am interested in sharing with you today is not only the national numbers, but how does the Pacific Northwest stack up against those national numbers, so that we can kind of see where we are and understand some of the trends that have happened recently. So the first thing to understand is we're following the money. So where is the money coming from? So in both these pie charts, on the left is seed and Series A deals split by deal investor location. And on the right is the percent of dollars invested by investor location. So in both those, whether that be the left or the right deals or the dollars, California is number one. That's that blue big piece of the pie. Here in the Pacific Northwest, we have 7% of the investor deals and 9% of the investor dollars was spent. And when we think about all of those deals, Pacific Northwest leads the fact that 90% of the dollars stay here at home within the Pacific Northwest. And you can see that ranges for all the other regions, all the way to the other end, where New York, the majority of the dollars they invest go to other regions other than their own region. So it's a whole variety, and it's great for angels and entrepreneurs in different regions to know when they're talking to angels in different regions where those pocketbooks are used. And when we think about it, where does that money that's not invested in the home region go? So on the left is the percent of deals, on the right is those dollars invested. And you can see in either case, California is one of those big receivers of 16% on both sides. The Pacific Northwest, we're right there in the middle in the green, with 9% of deals and 10% of those dollars invested out of their home region. So if you're from the Pacific Northwest and still looking for dollars from other regions, it happens. And then when we think about the angel groups and where those deals are backed, so just another way to think about that, where the Northwest is 8.4% of the total. Again, California with the largest at over 20% of the deals, and our 8.4% of those deals is only shrunk by 5% year over year. So pretty stable over time. And when we think about angel groups in the Northwest, what kind of industries are they interested in versus the national average? The dark blue is the national average. The green is us here in the Pacific Northwest. And you can see we have a higher percentage of information tech, probably no surprise. And the healthcare and biotech are lower than average. Everything else is pretty much compared relatively with the norm of the national average. One of the big things we look for every year is trying to understand valuations, pre-seed or Series A, pre-money valuations. And what is that range? So it's always interesting to know that national benchmark. So in 2020, the median pre-money valuation for seed, got to get all of those in there, was 6 million, and the average is 8.5. If the average is higher than the median, it means there's some of those that are skewing higher. And so when you look over in the Pacific Northwest, what you'll see is our region is very, very closely aligned to what we saw on the national average for those pre-money seed valuations, at 6 million for the median and 7.3 for the average pre-money. And then it was interesting in working with Gwen Edwards from the Angel Institute. This year, there were less companies that reported their Series A pre-money valuations. So they're only reporting things at the national level. But I wanted to give you some additional insight. And so what I have here is that pre-money valuation, median on the left in blue, average on the right in orange, and the last 3 years. So where we're ending up is for the median, it's at 14. For the average, it's at 22. But also wanted to show you the double-digit growth for both median and averages since last year for those Series A pre-money valuations. 32% growth on the median and 22% on the average. So numbers from that national number were growing quite nicely at that overall level. But something super interesting that we uncovered this year was when we talk about when the entrepreneurs go out and say what their funding round size is and what they declare versus what that actual investment ended up being. So what you see here are the numbers for the Northwest region compared to the national. On the left is that funding round size that they went out the door with, and on the right is what they ended up actually getting. So you can see that from a median standpoint, the Pacific Northwest for these seed rounds was lower. We had 750K for the median, 500 for the actual investment. But on average, they both were the same, which was quite interesting. In the national, however, the numbers were about 50% less. So going in with a median of 1 million, coming out with a median of 500,000, going in with an average of 1.9, coming out with an average of 1.6. So not getting all the dollars in that round on average that they were looking to achieve that first time. Series A, we saw even more of a drop on those numbers, where the round sizes started out in the Pacific Northwest from a median standpoint really large, and the actual dollars that were taken in were much smaller than that. So coming away with money at that Series A on average at 2.5 million, with a national average at 2.7. So these are just really good benchmarks if you are entrepreneurs moving forward, understanding what's happening as you're going to fundraise, and knowing what the temperature is of things out there. One of the other things that's always important for entrepreneurs to understand is this split between investors' money. So what we're seeing on the national average is about 70% of the money in 2020 went to new companies, whereas 30% of all of those checks went to the same companies that they had invested in before, but for an additional round, being a follow-on. And here in the Pacific Northwest, we're very close to that national average, 66 as that new company funding and 34% for the follow-on. When we think about how do investors fund investments, we hear a lot about things like safes, but when it comes right down to it, over here on the right is the national average, and over half of the funding comes through a convertible note. And you can see in up here in the Northwest over in green at 57%, we're pretty much pegged right on the national average in terms of convertible note as the most favored funding source. One of the things we always like to do, both here in the national region and in our local level that we'll get to in just a little bit, is to understand more of the gender views of what's being funded and who's funding them. So what we saw in 2020 is that the Pacific Northwest has funded female CEOs at 9% of all of the female CEOs were funded out of the Pacific Northwest. And then if we think about just the Pacific Northwest as a region here on the right, 16% of all of those CEOs were female. And that is pegged right spot on to the national average. New this year, and exciting to have more information to share, is how is the minority views seen both across and within the region. So from a minority CEO perspective, 5% of all of those CEOs were funded here in the Pacific Northwest. And within that region specifically, 10% of the CEOs were minority, which was slightly under the national average of 12. So that kind of wraps the US and national information from Halo on the speedy, the speedy pace. And now kind of going into Seattle, what I wanted to do is really give a nod to the angel groups here in Seattle. It is such a wonderful community to be a part of. And there are 8 groups here in Seattle that every year, year over year, share their aggregate top metrics with us so that we can, as an ecosystem, both angels and entrepreneurs can understand a little bit better how things have trended here in the Pacific Northwest. one of the things that's really important to understand is that match between founder and investor. It's kind of like a marriage. You have to think about it, because for any investment, you might be together for 6 to 10 years and maybe even longer. So from that standpoint, you're really looking for a good fit. So it's really important to understand the industry that the groups concentrate in, the stage in which they fund, and the type of fund that is, whether it be a network or a managed fund or an event fund such as SAC. So what we have here is these 8 angel groups: Seattle Angel Conference, Grubstakes, Swan, Sea Change, Puget Sound Venture Club, Element 8, Alliance of Angels, and Keiretsu Forum are the ones that have shared their data with me, and so that I can share it with you. So wanting to give you that view, I'm going to give you the famous kind of bouncing balls now. So, and if I can put this up, here we go. And what this is this is a graph that tells us along the x-axis at the bottom is the angel deal size. On the y-axis is the deals and the number of deals. And the size of the balls is the number of members that we have in each of the angel groups. And as the balls go through, down here along the bottom, what you see is the trend here in Seattle over time. And where we are right now is early in the ecosystem. You can see we didn't have all of those angel groups. We had Element 8, Alliance of Angels, Puget Sound Venture Club, and Keiretsu Forum. And this is back in 2010. And as we let the timeline proceed, you can see we have more coming in: Seattle Angel Conference, Swan, Sea Change. We can see then Grubstakes comes in, and we're going to stop here at 2020. So you get the picture of where things are today, or last year, I should say. And so what we have is this group here over, this dark blue group over here to the left, of where they are end up with the deal sizes are smaller, and that's because many of these deals are early deals, and the rounds are smaller. We have Sea Change and AOA here in these 2 groups in the middle. Keiretsu Forum holding down the largest deal size on average, and Puget Sound Venture Club kind of moves in this space. They have they do a number of deals. Their members do a number of deals, so it's great to see how they can work between seed and Series A. And so entrepreneurs, it's great for you to understand the lay of the land here in Seattle, so you know wherever you are, which group to talk to next. And as angels, let's say starting in Seattle Angel Conference where you grew there, it's great to know that there's a whole nother ecosystem for you to grow into to diversify your investments. And the last piece I want to share with you is that here in Seattle, not only do we have a strong angel group ecosystem, we also have a great, strong female participation. And so I wanted to share with you the participation for 2020 for each of our local angel groups and what percentage of those groups are females. And when we think about a national average of 20, you can see a vast majority of our groups are at or way above that average, which is great also for female entrepreneurs who are seeking funding, so that you can see like minds across the table. And it's great for diversity within all of those local angel groups. So I hope I was able to give you a lot of fun tidbits in a short amount of time. And so now my job is to pass the baton back to John, and John can highlight on the fantastic progress and impact that Seattle Angel Conference has had over the years.
Thanks very much. I really appreciate it. let me get my screen set up here for a second. See if
And I
can
will
get
stop sharing. There you go.
So
actually, John, before you get started, I just want to say, hey, John, can you have just a sec?
Made my screen all black. We want to talk a little bit about our process of, going from an application all the way to funding and what that means for us. We know some things about angel investing, and we try to get everybody to be aware of that. Doing due diligence matters. Being aware that this asset class is not liquid, you're going to be stuck with it for the duration of the investment, and it's going to take a long time. Several of them take more than 10 years. And we know that our failures come before our positive exits, and so we get a lot of bad news before we get good news. And we know that the communication and style of engagement with the founders matters a lot. And we try to help people in the Angel Conference come up with an investment thesis that will allow them to build a portfolio, not to think about it as a single investment, but a portfolio investment. So in that context, we can look at what we've been doing with all of the different things and pretend that it's a portfolio. Although we move investors from one investment off to other places. So we've invested over the last 20 Seattle Angel Conferences, 4.6 million. That's gone into 24 companies that have one. But if due diligence teams fall in love with their company, then they might form a side deal. So we have 39 companies in total that have been invested in. And those, we are sector agnostic, and so they have gone in a whole bunch of different groups. So we have social mentoring and advice kinds of things. We have B2B SaaS, B2C SaaS, hardware, clean tech, ag tech, health hardware, health software, tend to cover a wide range. And we have only one out of that group in the last 20 sessions that has gone on the public market. So this year, and we're still in the lockup period, energy storage systems went public through a SPAC. They're now available on the New York Stock Exchange as gigawatt hours, GWH. It has a $2 billion market cap. So, assuming the stock price stays where it's at, then we have ourselves a SAC unicorn. But we haven't really been saying that out in public because we have a lockup period where we're locked up until April of next year. And we just don't know what the return on that is going to look like until we know what the stock price is in April. But we did do a panel discussion on our YouTube channel, and it would be great if you are interested to go engage in that. Take a look at our YouTube channel, and I'll post that later. We've lost some of our companies, so there's about 9 of our companies that haven't made it. There's a couple here that are not listed because they're not winners that didn't make it, but these are companies that are early companies that stopped. And what I find interesting is they're not evenly spread across the sectors. We have had positive exits that were not public. Several of them have merged. Many of those mergers have happened in the last year. So PDM, Hub, and Alertive are all engagements and mergers of one kind or another where they've been combined with another company, and we got a little money back, or we got a little more money back, or we're getting stock back, which we then need to figure out what we're going to do about that. We have a bunch of sidecars that went as well, and I find it interesting that the of sidecars is fundamentally different than our distribution of winners. It's worth thinking about what we're doing with that. We do invest in hardware companies. We do invest in clean tech. Haven't so far invested in hardware health as a sidecar. We have touched about 1,300 companies. Almost all of the companies that talk to us are very happy to have gone through, even if they don't make it to the finals, because they get the chance to stand and deliver in the pitches that we do in the intermediate stages, forcing them to get some clarity on what they're saying and how it's being heard. And frequently that translates to them making progress with another group, even if they don't make. We've had 471 unique investors come through our program. We've had 656 of those as engagements. So some people are coming back many times, like Elaine comes back every time and helps us along the way. That combination of old investors talking to new investors helps us build a theory around portfolio construction and due diligence that's really helpful. And all of the members of SAC become members of the ACA, the Angel Capital Association, which has a bunch of workshops and conferences and such that are available as a part of their program. All of the groups that Elaine talked about have our alumni in them, and so we're glad to make introductions to any of those groups, and many of those groups are here today. On the second floor are tables for all of these groups, and in our mingle times you can go and visit with them. We have helped other places spin things out. We have Kelowna in BC, we have San Diego in Alaska, which also have things using the same model. Just be clear, this model came out of Oregon. The Ben Bench Conference and Angel Oregon use the same model as well. We also are now spinning up APIS Health Angels to address that shortfall of health-oriented investing. And we're looking at diversification of portfolios through this Startup Investor Accelerator in Europe. Those alumni that got excited, some of them have gone on to then create funds. Seattle Angel Fund was the point of creating the Seattle Angel Conference. That has now grown into the Sea Change Fund. We have Grubstakes that started in essentially SAC9 with a bunch of investors liking what they were doing together and deciding to do more of that. Two of the three partners at Flying Fish are alumni of ours and went through our fund manager peer learning group and engaged in this process of growing a Series C fund. And we have First Row Partners, which has grown from two of our alumni as well. A little more about that. First Row Partners started in 2020. Yoko is here. I saw her. I assume Minda will be coming in shortly as well. They've made 10 investments since they've started. They're aiming at writing 8 to 10 checks a year, probably around 100K or so, focusing on pre-seed companies and new media, data interconnectivity, and the amplifiers of who's involved in doing things. They're running a bunch of events, so do go take a look at their events. They can help get you perspective around how this investing process works, and also help investors and startups meet each other. We also have Grubstakes, which started in 2016. They've invested 2.4 million in 25 startups over the last 5 years, typically running about 700K a year. They tend to write, early pre-seed stage size checks with 2 to 4 a year. They have no sector bias and have been growing off of that core group of people that met in SAC9. So this is your opportunity to move forward. If you're an investor that's interested in more pre-seed investing training, then SAC21 is going to come up in the spring. If you're interested in health, then the APIS Health Angels is going to start up with the program in January. The deadline for companies to apply for that is December 1st. Elizabeth Cross-Nichols is here if you want to talk to her about that process. And I think I saw Alan Neiman, our fund manager, for that as well. And then we have this effort to explore a European angel conference. And if you're interested in that, give me a call. And we also run this fund manager peer learning group for people that are thinking that maybe angel investing is interesting enough that they want to become professional investors. So thanks for listening to this conversation, and let me bring Bob back up.
Thanks, John, and again, congratulations. What a tremendous impact. Before we move on, so we're gonna take a short break, but before we do, I wanted to say thanks again to Elaine. I've been watching her do the numbers for several years, and every time I'm blown away. And so, if you look down the bottom right-hand corner of your screen, there's a hand clap. If your mind was blown, will you give Elaine a hand clap? Yes, it's tremendous.
Oh, thanks, guys. Oh, that's awesome.
Well, and Elaine, I just want to say, some of the most powerful, when I look at that as a serial founder myself and mentor and advisor and investor in literally hundreds of companies, I hear it from the founder's perspective, understanding what the environment looks like to go out and raise money, and to see that there are patterns. Investors will only likely invest in certain kinds of companies at a certain stage, at a certain round, and certain check size. And it's really important for founders to understand that, so that they can be more effective as fundraisers. And I just think it's a service to them all. So thank you.